Good evening, ladies and gentlemen. Today is the 18th of November, the weekly expiry, and what an expiry. In line with the last three expiries, it's been all over the place, extremely volatile. Big moves here and there. We opened flat, moved up, crashed like anything from there, broke support zones, headed lower, and random volatility there as well. Towards the end, looks like okay, we're pulling back big time, having a short covering, and no, actually, it gets sold into. So it was quite intense. I was very happy with the way I approached it. It was a very measured approach. At different points, I was very, happy to cut my risk and take stop losses immediately. I was assessing what is the possibility of a trade working in my favor. It didn't work out, had to get out of it. Tried another trade, didn't work out, had to get out of it. Each time taking risk off. And finally, I think all said and done, I'm quite happy that I realized in between that I became tired. And it didn't, even though I spotted something that I could have thought was a high probability trade with a good risk reward in that time frame, I didn't take it because I was not sitting on a big profit buffer. So I can't take additional risk when I'm not sitting on some nice big profit buffer. And that being the case, I hope you had a good expiry. And there's a long weekend, so this was tiring. I hope everyone gets some rest. I will catch you next week. Take care. Bye bye.
Want to meet like-minded traders and discuss option strategies, adjustments and more? Just type in Discuss Nifty in your Telegram search box and join the friendly trader community.
Good morning, ladies and gentlemen. The time is 9:25 and I basically got one problem for me today, which is that my internet is not working. Two of my internet lines are down because things have been dug up, and because of that I am not increasing my position. I'm actually quite happy to increase the sizing on this particular position, which is the 17,750 and 1850, but I don't want to do that because I'm working off a mobile hotspot. There can be delays because of which order execution gets delayed. All kinds of issues can creep up, so I'm going to be trading today quite small. And the idea is that this weakness in global markets, SGX Nifty, I think, went almost at one point just 30 points above 17,800. This should act as a tremendous resistance. We had huge call writing at 18,000 today, and more or less, I'm expecting downside can be there till probably here, this range, in case there is downside, which is why both my strike selection is 50 points below 17,800 and 50 points above 18,000, so that I have enough reaction time in case there is a move in either direction to move out of this position. Going by the 17,900 straddle pricing as well, it's pricing in about 100 points in either direction, which gives the same range, and same range from which I'm keeping 50 points away. As far as OI is concerned, right into the open, surprisingly a lot of put writing at 17,900 and 17,950, and also call writing. So people are expecting this range to hold. This is the hypothesis that's building for everyone. So 18,000 to 17,800 from the overall OI, this is what you get. But the markets definitely are weaker, on the weaker side, because global sentiment is not supporting, and for a while now, the kind of positioning of the market is suggesting that it should stay relatively weak until we once again take out 18,200. Until 18,200 is taken out properly, the market is going to continue to remain in a consolidation to slightly weak phase. So that being the case, about 18 points in this particular spread, slightly less than 18. And my idea is that I don't want to do over management of the position. I will only manage at a point where either of these particular options start to head to about 15, in which case I will see what are my options. But until then, I will not be trying to overly manage this position. So as of now, we opened better than what SGX was implying, and some amount of put writing, but not much else. Okay, so right off the bat, 100-point move. Started off by making this 60-point up move, and then from there have crashed very quickly in two candles for 100 points. What I've done is move down my calls very quickly from 1850 to 18,000, and then 17,950 into the slightest of pullbacks. So in fact, the idea, the reason why this call is in negative is in the slightest of pullback, I actually moved it further down. So because now there is going to be huge call writing at 17,950 and above, and these puts are continuing to spike. What I'll do is I'll actually wait for a test of 17,850. Till then, I will hold on to these puts. I'll let them expand till about 25, 26. That's the max I'll let them go. At that point, I'll square them off and roll them to 17,700. That'll be the plan. But until they expand to about 25, 26, I'll not be getting rid of them. So I won't be too early in trying to square off this position. Potentially 33 points in this position at this point of time. And yeah, we'll see how this has to be managed. But for now, it's all right. Little bit of a fear because we had a gap up. Into that, people would have sold some put options, and now into the reversal, they would have very quickly gotten out of those put options. So yeah, as things stand, about 4 points down, and yeah, got an entire day to go. We'll keep you posted. Okay, the weakness continues. Everything is falling, and basically we've now come into this support zone. Now the question is, will we bounce off of 17,800 or will we continue to slide from there? For now, I have moved my calls down to 17,900, and the idea will be to now move the puts away. So if we bounce off 17,800, then that's fine. If we break 17,800, then I will be squaring off these puts around 25, 26 and rolling them lower to 17,700. First, I'll remove half just as we start to break 17,800, and then I will remove the other half. So far, steady one way down move. Okay, I have moved down both my all of my calls and moved down my puts as well. I'm getting slight execution delays, which can be a little problematic. I'm not sure if this is to do with my internet or with Zerodha, but some people are saying there's some issue happening with Zerodha as well. So we'll have to be a little careful about that. Right now it's squared off the 17,750 puts, moved them to 17,700, and calls have moved all the way down to 17,900. The risk management on this calls is going to be, if it expands to about 22, 23, then I will square them and roll them higher. Until then, I will keep my calls at 17,900. Time is 10:15, and so far, already from the high of the day, we are 150 points down. Hardly been an hour, and already 60 point up move and 150 point down move. Okay, so basically, at this point of time, we've had tremendous selling, huge amount of call shorting. Now at every level above 17,750, this actually only call shorts. That's a huge amount of call side open interest. PCR 0.5, right? So, which is why one would think how much further downside can really be expected when there are really not that many puts in the system. So, everything, like everything is down. There's really nothing that is holding. In fact, Bank Nifty is outperforming big time. Bank Nifty not having dipped much at all, just down 0.4%, is deeply outperforming at this point of time. So the idea is, okay, now into this entire down move, puts have exploded. Into the up move, I will hold on to these calls till about 25, 26. I'll let them expand if we pull back to 17,800. I'll let them expand till about 25, 26. At that point, I'll take off half. And then if they go to 30, then I'll take another half off in the direction of the risk. Otherwise, I'm going to keep my calls at 17,850. Because as far as I can see, there's been put winding at every level below 17,800. So, so this particular strike should be a little bit okay to hold on to, even if it expands a little bit. So that is provided, we don't continue to slide from here. Like if you think about it, gone are the times where you could take easy credit. This put option opened at somewhere like at 7 rupees, and from 7 rupees it has gone to 1.55 rupees, and then for all you know, it comes back down and goes to zero eventually. But yeah, it's been a tricky time for trading non-directionally. We opened kind of flat. From there 60 point up move, and from there 200 point down move. So hasn't been easy, but I think I've done all right so far in balancing my risk as the market has been moving. We'll keep you posted. I had a little bit of delay also in risking off on this put option. I'm facing slight delay, so that is something else to be concerned about. So anyway, we've got the entire day left to go. If whatever volatility has to play out plays out right off the bat in the beginning, I'd be quite happy with that. Okay, so here's how things are looking. Basically, we've had selling across the board, and now we're seeing little bit of buying across the board. HDFC Bank suddenly showing deep strength from the lows, and yeah, Bank Nifty really actually majorly outperforming today. So what I'm expecting is that everyone's going to be working with this trend line. Above this, there might be a little bit of short covering, but my exit point will be somewhere here, 17,800. So if we start testing 17,800, what I'm going to do is I'm going to kill the entire trade, because then, I mean, it's happened just the nature of behavior lately that we see this big pullback, and then puts absolutely crashed. The 7 rupee put that went to 60 rupees goes back to 7 rupees, and then again a huge explosion going back, right? So I mean, that's been the nature of how the market has been behaving. So if that does happen, then I'm going to, if we start heading over 17,800, then I'm going to square off this entire trade, and instead short like the 17,550 put and 18,000 call something for like 6-7 rupees, and that will be called at a day right there. Because this I don't mind a double way move. I can manage a double way move, but lately the trend has been 3-4 way moves, and given that, I would rather not. I mean, ideally, if this doesn't go to 1920, at this point 1920 is the point where I would risk off on it, then I'll be comfortable continuing to hold this position. So basically around, if that 20 is my stop loss on this call short, and yeah, until then no issues. But if it starts going there, then obviously it is a problem. So as of now, I mean, everything looks super bearish. There's no doubt. I mean, you don't have to check the data. You just have to see to where the bears and where the bulls have moved. And yeah, maximum open interest 18,000. You followed closely by, I mean, 18,200 doesn't really make sense anymore. I'm surprised 18,200 hasn't been unwound like anything. I think it's there because it's a hedge. That's the hedge strike, and then 17,900. 17,800, all calls, like, all the maximum open interest are all calls. And yeah, potentially this starts to move up here, then you'll see some amount of short covering, and yeah, 20 rupees is the stop loss. The thing is, this entire time, it's not like there've been some huge puts in the system. So despite there hardly being any puts in the system, for us to see this kind of a down move, I guess it's fair enough. We are at 11 o'clock. It's been an interesting first 1 hour, 45 minutes. We've still got the rest of the day to go. Okay, so let me go what's happening. So after the fall, we had a pullback, and it looked like this trend line is getting breached and can be, but it's so weak, like, so you wouldn't really expect that kind of a big pullback either. Slight pullback, crashed the puts, didn't really expand the calls, didn't do any adjustment here. And just now, as we're starting to test the day's low, what I've done is I've rolled all my calls down now to 17,800, and yeah, going by the OI as well. A lot of people did it at a better price than me. I could have done it a little bit earlier, but I just waited to get confirmation that we're heading back to the day's low. And now the idea is, if we start testing on the downside 17,700, then at that point I'll be forced to immediately square off 50% of this 17,650 put and move it to 17,600, and then I will move the other 50%. So somewhere about 1920 is where I'll take off the first half, and the second half at probably 23, 24. So that's the plan. Yeah, 11:45, not yet at the halfway mark, and so far very, very, very kind of one-way expiry. One-way expiries are not a problem, actually, to be perfectly honest. A one-sided move is fine. The only problem is when you have a deep one-side move, you have a huge pullback, and then again another 2, 3, 4-way moves are what the problem are. Okay, so more than anything else, what I'll have to be a little bit aware of is the chance for this 17,800 call actually exploding. So let me go over. Yeah, so see, into the last down move that we saw, after the pullback and the down move, there is this huge writing of 17,800 call, right? And I've written it at a terribly low price. I mean, it's not like I've written it at a great price, because into that down move, this particular call option crashed all the way from 27 or so to like 13 at one point. So the point where I'll be getting out of it will be a little bit on the aggressive side only. At 20, I will exit half this call and move it higher. And at here about 23, 24, I'll exit the remainder, because in case there's a reversal, there's going to be a big blowing up. We can easily head back to 30 plus levels on this call if there is a strong enough reversal. If we head now here, I mean, obviously then it means it becomes at the money. It'll shoot up like anything. So for now, though, it's all right. My position is also doing all right. Okay, let me go over the plan for now. The plan for now is basically I'm short this 150 points triangle, which is worth about 26. It's been worth 26 this entire time. The way this particular thing plays out, if there's 50 moves move in either direction, it's going to burn. So I can't stay in this position for too long. But the longer I get to stay, the more I can potentially benefit. So the idea is, if either of these go to 18 at this point of time, it'll mean that the other is trading under 10. And roughly from where I am, I would have given up about 2.5 points or so. 2.5 points mark to market will be down. I will kill this trade at that point, buy it back, and sell this 17,750, 17,850 triangle. And that way I will basically kill the risk in my trade, and I'll have a very tight stop loss for the penny trade as well. And penny trade is always going to be easy to manage. Because how does this work exactly? My risk will play out only if there is a quick move in the next 10-15 minutes. If for the next 1 hour that move doesn't come, this position can give up a lot of value and I can benefit from that. So that's kind of how you have to look at it. Obviously, if I continue to hold this position, it might work out really badly if there's a continued down move or a pullback, either of those two. But for now, this is comfortable, and yeah, 26 points is a good point to be in. If I can hold this position at least till another hour, then that and without having to make any changes, then that will work out really well. Okay, so turns out it's not going to be so easy to sit in this position, and yeah, that's basically confirmation of that stop loss getting hit. Now no option but to get rid of this trade. Okay, so what is the plan now? There is how much in this? About 8 rupees, and if either of them starts to expand to 8 rupees, I'll be exiting that or taking additional credit from the other side. That's about it. Not much else. The thing is, yes, I exited this at a pretty bad price. I exited at 20, and started at 18, went all the way up till 20. But there's too much risk in holding on beyond that. So there is no option. And yes, I gave up 2 points. I put a view to it. It's 26 points. Had we held there for an hour, easily 5 to 6 points I would have gotten in terms of falling off in premiums. And now that we haven't held there, and we immediately started to break over here, it just makes sense for me to then get out of the position. The reason I've risked off and not moved my calls lower is I'm not too comfortable shorting calls below 17,800. There's a very good chance that we see some kind of a big short covering reversal and head all the way up till 17,800. Nothing is off the cards, which is why I would rather much prefer to just get out on both sides and try to kill the trade at this point of time. See if there's an opportunity later, and this thing. You have to kind of take some risk at different points of time, which is why that was the case. But no, we're once again back at the day's low, and now below 17,700, and yeah, a lot of straddle positions building up at 17,700 for 80 rupees, giving 80 points in either direction, and call writing picking up quite a lot at 17,750 strike as well. The time is almost 1:30, which means 1.5 hours to go for averaging. At this point, what I've done is I've increased my sizing to 45,000 and roughly entered this when there was about 9.5 rupees, just about 10. And when it was about 10, I was entering this position. And yeah, so by the time my orders got executed, I think I got about 8.5. So 8.5 is, sorry, 9 points is what is there currently in this. My hedges cost about 2 rupees, so 7 points of net credit. If we pull back all the way till 17,800, then there will be quite a threat to these calls. So my stop loss is actually quite close. My stop loss is 7.5 on both these particular strikes. So if either of them starts heading to 7.5, I will be squaring them off and rolling it higher. This goes to 7.5 and I actually roll away my call, then that'll mean that there'll be no call credit left, which is why I would probably move half my quantity and keep my average credit from each leg similar. So that's the plan, and I'll keep you posted. The time is 1:28, so 1.5 hour to go for averaging. 7 points is pretty good on a 45,000 sizing, and yeah, I will not be taking too much risk, just about another 1.5 points of call expansion and I will be out of these calls. The other reason why, even though my calls are quite close, I'm not too concerned is that at this point 17,800 call has the maximum open interest, and on the put side the max OI is, I mean, around 17,600 put and 17,700 put. So I'm more inclined towards this call side holding, and in case it doesn't, it will hit my stop loss and it will push me out. So what I'm looking at more intently than anything else is the behavior of the 17,800 call option. This is basically where everybody, the maximum call shorters are sitting. Just as I speak, it's tanking a little bit in value. The average price at which it was shorted is 26. So the threat of short covering only comes around about when it starts heading over 20. And yeah, until then, there won't be too much of a threat of an explosion on these call options. At the same time, I can't move up my put options because after the entire move, there has been this big crash in put option prices after this buyback. Just this much, but a complete crash in put options. If I move up my puts now, I get cheesed on the deal and I get a terrible deal for doing that. So I can't go too much above 17,650. And yeah, just the slightest of red candle already it's gained basically 100% doubled in value. So yeah, fair enough though, because the call side has given up also half its value. So yeah, this is generally a jittery time, but the problem with the trade like this is it's actually, if you think about it, it's terrible risk reward if you sit in the trade. You can't sit in this trade for too long. If your stop is hitting, if this goes to 7.5, stop is hitting, have to take the exit. If you don't take the exit, you have the risk of it expanding into oblivion. So that is there. We're just pulling back slightly to 17,750, and from that alone, quite an expansion once again on the puts. So okay, I'm having some issues with execution, and this is a dangerous sign. I placed orders. I don't know if they're pending or have not been received by Zerodha. My internet is back up and fine, but I'm basically trying to buy back my short call, placing the order here. So you can see it list, but okay, they're executing in quite a delayed manner. So I don't know if you can hear the delay between when my order is being placed and how it is executed. Basically, I had to take the stop loss there because with 1 hour 20 minutes to go, it just won't make sense to be short those calls. They can really explode, right? So anyway, so at this point we're back to square one, and I think for the next 1 hour this trade is basically as dead as can be, and into averaging we'll see if something can be done. Today was a day for me once again to not lose money. That's kind of what I'm going for. And yeah, okay, so look, there's an opportunity here which I'm not taking for the simple reason that I'm not sitting in a good enough profit buffer. If I was up, maybe to 2.5, 3 lakhs at this point of time, then something I would have considered is, okay, now this is losing value. But right, just like 5 minutes ago, this was trading at 11 and a half, 12. Just as we, from the day, from the high swing high that we made, we started to dip. Big put side short covering spike. And at that point, okay, it's already crashed to 11. But basically, I could have taken on more credit, given that now there is only 50 minutes left to go for averaging, and this position, which is backed by OI, so 17,700 looks like should not be cleared on the downside, and 17,800, 850. So you can say split between these two should not clear. So if I'm going for 17,850, 17,700 for 11 points, that's actually, I mean, I would take that trade if I had enough of a profit buffer. Now, yeah, as I'm speaking to you, it has fallen off to about 9 points, but I don't have a profit buffer and I cannot take additional risk when I'm not already sitting in some kind of profit. I don't want to then have a move that goes against me and then I stop. First of all, it's been such a frustrating day, so I myself am frustrated at this point. Like, think of my thought process. Okay, if I now with my hedges less than 1 point take 11 points from that spread, so leaving alone what I spend for my hedge, that's still going to be 4.5 lakhs of profit. That's 10 rupees on 45,000 sizing, works out to 1%. I can take that trade, but if it goes against me, there are a few things that are already going against me. I'm frustrated. The day has been very annoying. I don't have a profit buffer. I'm more likely to make mistakes, so I'm not going to take that chance. That's kind of how one has to look at it, is that it is possible that I take that trade, very much come out of it profitable. And in a different scenario, honestly, there's nothing wrong. Even I'm not sitting in a loss as such. I've never gone into a loss to be like, okay, let me not take additional risk. But I know I'm frustrated. I know I'm already annoyed with the kind of move that we've had today. We open flat, move up with huge strength, massive sell-off, multiple pullbacks here and there, whatnot. In all of this drama, it doesn't make sense to now take any additional risk. So that's I don't know, make of it what you will, but like, try and understand what's happening to you at all points of time. So yeah, we'll keep you posted. There's 48 minutes to go. I mean, given that the expected expiry is 17,700 to 17,850, I would not think that this position is going to give me much of a problem. If it does, right now my stop loss in either of them will be 4 rupees. So I'll take a 4 rupee stop loss and switch to whichever strike is there, and then see an averaging if I can collect an additional 1.5 rupees. So, okay, there's 10 minutes to go for averaging. Just now I've moved up my put to 17,700 because there's just no credit left, and when the 17,750 put itself is trading for under 5 rupees, then there's no reason for me to be on nil credit on the put side. So about 60 paisa of credit from there, about 90 paisa of credit from the call side. As we head into averaging, looks like we're starting to hover around that 17,800 mark, and there's a good chance that we expire at 17,800. So into averaging, if there's enough move above 17,800, I have my stop loss exit on the entire position order open. I also have individual stop losses on the calls and puts open. Roughly, if either of them starts to go to 3 rupees, then it's a problem. What I'll do at that point is, if it's on the upside, if we move to 17,800, this starts to go to 3 rupees, then I will move up my puts to 17,750, which at that point should also be available for 2.5 to 3 rupees. If nothing happens also for the first 10 minutes of averaging, then also I will move up my puts. If we're holding perfectly below 17,800, I might move down my calls as well. So all of that will have to be like trades with extremely tight, once again, risk management. Currently 50 paisa in my hedges and about 2 rupees in the trade itself. So 1 rupee 50 paisa, and it's going to be like quite okay to manage. I have 60 points on the upside and 90 points on the downside, so that gives me ample reaction time. And given where this 17,800 call is trading at 11 rupees, looks like if there is a threat, it would be most likely be on the upside. I'll keep you posted. The time is 2:51. We've got 9 minutes to go for averaging. So one more thing. So right now, if somebody buys the 17800 call for about 12 rupees, and for let's say 2 rupees sells this, they're basically getting if they get max profit, which means 17850 call has to be at the money by the time it's closed, it's 1 in 4. So there's a 25% chance that this call actually ends at the money by the time we close. So that is something to keep in mind. Also, as soon as averaging starts, we might actually see move on the downside as well. So that is very much a possibility, which is why I don't want to move up my puts right now to 17750. I'm comfortable where I am, and yeah, we'll let you know. If this starts expanding, then I will move up, and if it starts expanding too quickly, then I will just use the stop loss exit on the entire trade. So that's the plan. Okay, the weighted averaging has started. One option that I have now is to move up my puts to 17800, because into the weighted average period we're actually holding a little bit on the green side, but I'm not going to be in a rush to do that. I'll wait for this to expand to around 4 rupees. If it expands to 4 rupees, then sure shot the put option is going to go to 0, and yeah, at that point I can move my put option up, and until then I don't want to, because there's a good chance that into averaging we actually get pushed down and the average gets pulled below 17800. Either is a possibility. So okay, the weighted average is playing out all right. Into the weighted average itself, we had a sharp down move. We started the average at 17830, but very quickly the 2 rupees put option of 17800, and that's kind of why I didn't take 17800 credit. Spiked all the way up till I think I don't know, 32 change, quite a lot. These put options went till 4. I didn't understand exactly why, because I don't know why people covered it at such a massive price at some point. 4 rupees. When they went to 4 rupees, I rolled down my call and got an additional 1.5 rupees. So these, you can see the wick here, went up till 5 almost. So panic covering. And yeah, at that point, I was also considering hitting my exit stop loss. So first thing I did was roll down my call, and in just about 1 second, it went up from 3 to 4 point something, and then came back down below 3. So I didn't exactly hit the stop loss there. But that being said, now hedges are going to lose about 50 paisa, and this position itself should make me another 2 rupees. So around 1 rupee 50 paisa is what it should be. I'm quite happy with how I approached the averaging also. I had a rough idea to keep enough of a space, and my stop loss management also I think was pretty much on point. The only thing that was giving me jitters is order execution, and I'm starting to think that that is just like a ridiculous problem to have, to not know if your orders will execute or not. As of now, we're holding at 765, just 15 points away till these go in the money. But actually, I don't have to be too concerned about them going in the money, because this 20 rupees, 22 rupees call option, the 17750 trading for 22, needs to go to 0 for this to have even a single point of value. We're already almost halfway, 13 minutes into averaging. So I don't see how they pull down the average by that much. We need to spend a considerable time below 750 for this to even consider having any value. As long as, you know, we need to spend the next half of averaging considerably below, at least 20 points below 750 for this to have value. So for now, I'm going to let it sit, but if it expands to 3.5, I will just take the stop loss exit. So we'll keep you posted. High probability that I make 2 points, and a low probability that I lose maybe 1.5. So I'm fine with that. Okay, so here is where it's like kind of feels annoying, but I mean, look, the first green candle, this put is going to lose all its premium. It's gone just like that. Fell from 2 to 0.5, and the reason for that is, if you look at the average, you need to look at this 17750 call option. It's trading at 1819, and the lowest it went right now is also about, I think, 15. So it has to give up all of its value. I mean, that is the probability. And even if it starts to give up all its value, there's not going to be a huge value, maybe in decimal points, for the 17750. So I mean, that's exactly why the first green candle, everything eroded, all the premium eroded. This is back up to 20. So the average is close to 17,770. And that's why this is going to lose all its value. Of course, also my stop loss didn't hit. You see, stayed below where I want to exit. So the first sign of green, completely no premium will be left on the put option. Now we're 18 minutes in, there's 12 minutes to go. This in 12 minutes, the average of this needs to come to zero. So, I mean, the price of this needs to come to zero, which is just highly unlikely. Now I will put probably a 1 in 50 chance that, so like a 2% chance that this put option has any value at close. It's kind of working in my favor. Now I'll let all of this expire and yeah, okay, it's done. And yeah, I made error, but I corrected very quickly in the end. I was trying to reduce some of this position so that I can create margin in order to enter a positional trade. I wanted to do an iron condor that I would carry. I was getting a pretty decent range. This is the trade I was going for, but I couldn't take it because I had to keep exiting this and this in order to create margin, and at the same time you need to have the same buy to sell ratio, otherwise you can't buy OTM options. Like you can see, yeah, see this thing is rejected, was not able to buy the hedge legs. So that's why no position to carry over the long weekend. I was thinking I can carry an iron condor. I was getting a pretty decent range on a good risk to reward. But anyway, that's about it. Today was not a day meant to be for me. Like it would never. This is difficult. Like I have to see. The thing is, I want to make X amount of money without even, to be very frank, taking even 1/3 or 1/4 that risk. I never, in the entire day, if I'm planning to make 5 lakhs, I don't want my mark to market to go more than 1.5 lakh negative at any point of time. And if that's the kind of safety I'm looking for, then when you have wild moves in every direction, it's going to backfire quite a lot. And yeah, today was just one of those days. I'm quite happy with how I managed it. I think all said and done. Yeah, I hope you had a good expiry. It was definitely like, I think this is the fourth expiry back to back. It has been relatively tricky. I mean, gone are the days where you open, you keep a range of 100, 150 points. This is pretty intense. So, I mean, the only summary is that I'm quite exhausted. And yeah, I will catch you guys next week. Have a great weekend. Long weekend is there. And I'll see you at the next.
Thank you for watching. Please post any questions you have in the comment section. Also, do not forget to like and share the video and subscribe to the channel. To find us on Twitter, Telegram and Facebook, use the username NiftyBN. Also, we post some of our trades to the community tab. So do not forget to check that from time to time.